Well, now what? Now what? Where do we go from here? On Thursday, down 660 points. On Friday, up 746 points. So basically, we have a checkmate, don't we? We have to give a bump to the Bullwinkles. They have an extra 80, 90 points in their favor. Now, I listened to the entire Q&A with Powell and Bernanke and Janet, Mrs. Magoo Yellen, all 59 minutes of it. And nowhere in that entire hour did I hear Powell say he's going to stop hiking. But the Bullwinkles ran on it. I also heard him not say anything about killing the balance sheet roll-off. What I did hear him say is, well, maybe we'll do this, maybe we'll do that, we're flexible, I have my ear to the market, I'm listening to the market, so I could always change my policy anytime I want to, which begs the question is, what is the policy of the Fed? There is no policy. These mouth-breathing, troglodyte academic professors have no policy, and they'll do whatever they want when they want. But I don't know what they said justifies this 746-point pop, other than hope. By the way, hope is the absolute worst possible trading strategy anybody could have. So let's take a look at what's going on here in the broad markets. And I want to go over to a weekly so we can eliminate a lot of the noise here and try to see what's going on. For the case of the Bullwinkles, this is in your favor. There's been a very sharp reversal on the Russell 2000. And it was the Russell 2000 that led us all the way up and has been leading us all the way down. There's also been a very sharp V-shaped reversal in money stream, which indicates that money is coming back in. This weekly candle from this current week, you got to be happy with this really long lower shadow, this lower candle wick on the weekly candle. That's very bullish. The buyers came in and pushed the sellers all the way back. We're kind of trapped right now on this level that's drawn from the week of April 6th low. That low held all year long up until the end of December as support, and it failed dramatically. So now it's resistance, and lo and behold, that's where it stopped. That's where it stopped on Friday. It's got its head slightly above it. If it can get above there on the Dow, the 23,393 level, and hold, we're going to be good for a while. If we can get some follow through here tomorrow or Tuesday or anytime this week, the first problem we would run into is the 50-period moving average, which is at 24,392, and then you've got double resistance at the 200-day moving average up at 24,970. This, of course, is the September 21st all-time high on the Dow. So if we get above this resistance that we're talking about right now, we've got a trading range basically of about 1,000 points or so. Let's add in another bullet point here, and that is the volume. The volume. This is the week right here of February in 2018 where all of the funds, it was the most crowded trade out there, the short volatility. That was the VIX termination event. That's where those things totally imploded and, frankly, went out of business in one day. They had to shut down. Then you got the volume here from the week of Christmas. You also had the highest volatility on those 2 weeks of the entire year. And so we got volume increases with volatility, and here's where things get a little bit crazy. When you've got the highest volatility and the highest volume, we have a liquidity problem. In that, the top of the E-mini order book keeps shrinking and shrinking and shrinking. And why is that? When volatility increases and volume increases, the high frequency traders, the algos, the bots, they just turn the machines off, and there is no depth to the order book at that point. S&P 500, the spoos, banging their head right exactly on resistance by a few ticks. If it could get through where we closed, our first resistance will come in at the 50-day, which is at 26.30. You got the 200-day up at 27.41. Incredible volume again that week of Christmas, just the highest volume of the year. And I think I mentioned it before, the biggest volume was on a half-day session. VIX is falling. It's starting to roll over and fall again. And, this brings us to these 600 days down, 600 days up, 700 days up, 700 days down thing. When the VIX was around the high 20s, approaching the 30s, even above that. As VIX falls below 20, we'll probably start to see days that only have a Dow move of low 400s or even less. And, as we spent all of 2017 and most of 2018 with VIX single digits sometimes, but most of the year between 10 and 12, the moves were much slower. So as VIX goes, trading range should follow. The Nasdaq 100. And I'm going to deal with FANG, I think, in a different video or different series of videos. I think I'm going to break down each component of FANG and do them all individually because they're really interesting. But the bottom line is tech is leading us here. They're clearly through resistance, well above it, a beautiful lower wick on that weekly candle. We're going to run into not trouble, but we're going to hit our first resistance on the Nasdaq 100 up around 66.31, another 200 points, and then you've got that 200 problem up at 70.29. But for now, Nasdaq 100 has cleared resistance, and it has cleared it nicely. And it's a very good sign for you bullwinkles out there. I'll wrap up talking about the Russell 2000. This is the IWM, the ETF for the Russie. Keep this overlaid on your charts. I even use it intraday, on my 15-minute, because the Russell led us all the way up, and then it led us all the way down, and a lot faster than the Dow, the SPY, or the QQQs. Really nice weekly pattern here. Money stream coming back into the Russell with attitude and force. It has cleared out its resistance at 134, and Russell looks good to go at least until 144, and then up around the 158 level. Excellent volume since December. It's above even last week and the week before. It's above its 200-day moving average of volume, and it's looking good. And as the Rusell goes, everything is going to follow. So to conclude, things are looking good for you bullwinkles out there. For the time being anyway, we'll see what this week brings. Why do we have this massive influx of money coming in? I don't know, because Trump told everyone to buy the fucking dip. You got the three wise people over at the Fed saying basically nothing but green lighting again by the fucking dip. But there we have it. There we have it. I am King Cambo. Smoke 'em if you got 'em. This is how I roll on the broad markets. And that will be enough of my inane drivel for January 6th, 2019.